want to get your thought process on Toronto rents.
Yep.
Rental market's doing great right now. Most people do the equity play when they're buying a condo, right?
Yes.
They're like, I'd rather subsidize maybe a couple $100 a month, $500 a month, but I'm going to do the 50, 60, 70 grand a year in equity.
Correct.
That's how I'm going to make my money.
Correct.
Do you think with the way prices are going, and now rents are flying, do you think people will ever be able to hit that cash flow?
Yes. No, absolutely.
Okay.
Yeah. I think, the key with the cash flow, and this is the same for, there's also headlines, thousands of rental, purpose-built rental buildings are on hold because of interest rates, because of cap rates, so on and so forth. It's really the interest rate that makes, has the effect. So when we hear stories or see headlines that, whoever, like this pension fund canceled 2,000 units because, of what's happening in the market, is not because of rent. It has to do with interest rates. So it's the cost of the mortgage, whether it's my construction financing which is a form of mortgage, whether it's a pension fund's ownership of a building, which is a form of mortgage, or whether it's an individual investor or homeowner and their mortgage. If interest rates are at 2 or 3%, which we all believe they're going to go back to, then absolutely you can make money on the rents. But when interest rates go up to 5, 6, 7, it starts to get a little tricky. And if interest rates go to 9 or 10, it gets worse. So it's really not the purchase price is not the definitive thing. It's really what is your carrying cost based on what's your interest rate. It's interesting because we have this sort of strange time with hyperinflation right now, and that's why Bank of Canada's increasing the rates. But even Bank of Canada and all the charter banks are signaling this is temporary. This is not going to last. And what we see, and why I think there's going to be some big launches coming out in the next 6 to 12 months, is remember, if you're buying pre-construction, so if you're buying a project from me, we're gonna have launches. I can't tell you where, but Lanterra's gearing up to launch some new projects next spring. If you buy from us at pre-construction, you're probably putting up $100,000 to $200,000 over a period of time. And then your mortgage isn't going to be for 5 years. Well, 5 years from now, interest rates are not going to be what they are today. So today, people shouldn't be using today's sort of math. What they should be thinking is, can I afford the deposit, buy in an area that is upwardly mobile, and buy with a developer that you believe builds a quality product? I don't think you can go wrong. I think out of the 25,000 units we built, it'd be hard to find someone who said they lost money on Lanterra.
Mm-hmm. Yeah, and stop marrying the rate.
Correct.
Right?
Yes, exactly.
People are just
like
really narrow
today's
focused.
rate is not what's going to happen 5 years from now when you close on that unit. And even for young people always ask me, how do I get into the market? I always recommend buy pre-construction. I'm like, rent in the meantime, buy pre-construction. So, and people worry too much about, am I getting a good deal? You shouldn't think that way. You should think, am I buying in a neighborhood that I think in 5 years is going to be the next Yorkville, which places like Distillery are going to just explode in value, especially with all the waterfront stuff that's happening. Like you can tell the areas of the city.
Yeah.
I told people to buy in Leslieville 7 years ago.
Mm-hmm.
They're all thrilled now. They're like, oh my God, I'm so glad I bought in Leslieville, because Leslieville exploded. So
yeah, I live East Bayfront.
Oh, beautiful.
So I'm seeing it all just
Exactly.
change. And I mean, it's like the last big piece of waterfront left, right?
Correct.
And I'm just watching that. My view is of Cherry.
Yes.
And everything that's going on there. So it's exciting to see what that view would look like in the future.
It's going to be outrageous. It's going to be spectacular.
It's such a good vibe.
Absolutely.
It's such a good East End, my friends.
East End is where the value is.
Yeah.
West End, we love West End. We build in the West End, but if you're thinking, the future, the East has more upward potential than the West will always be money. The West is money. It's like gold standard, but it's already gold standard. So gold only goes up so fast.
Mm-hmm.
Whereas the East is a little bit sort of like diamond in the rough. So that's where there's, I always like to tell people, again, be comfortable with the neighborhood, but if you can buy in an up and coming area, that's really the future.